Hello everyone. In the previous part, you have derived sales revenue from the trade receivables control account. Now, you will be learning how to derive the inventory. Alright? And you can derive your inventory from two methods. So the first way is number one, inventory purchase, right? Is two forms, right? So the first one is you could purchase your inventory by cash. Alright, so if again the same as your cash sales, when you purchase your inventory by cash, right? No biggie. Usually what you do is that you look at your cash in hand or your cash at bank. Now, source document, sometimes you look at your bank statements or you look at your receipts. Alright, so this is very similar to the sales revenue. Now, that is, what if you purchase your inventory and you took your inventory but you haven't paid your supplier yet? So you know that that is called a credit purchase of inventory. A credit purchase of inventory, what is the double entry? So when you buy your inventory and you purchased it and you took it without paying, the double entry you will record is inventory increase, right? The other account that you will record is trade payable also increase. And because trade payable increases, alright, because trade payable increases, you are going to be able to find your inventory, credit purchase of inventory from the trade payable control account. And in this segment, I am going to focus on how you can use the trade payables control account to find out what is your credit purchase of inventory. Alright, so you might need some time again because this is a video. Please use the time to pause as and when you need to copy the work down. Alright, so give you 10 seconds to maybe copy down the two items. Okay, if you need more time, please feel free to pause the video. Let's take a look at example 2. Riding on Jollibee trading again. So all example 1, 2, 3 all are connected to each other, okay? So Jollibee trading had the following information for the 6 months again. The beginning balance is 9,600. Beginning balance of what? Beginning balance of the trade payables account, $9,600. And the ending balance at the end of the period is $11,800. So quite straightforward. What do the question want you to do? The question want you to be able to calculate the net value of inventory, alright? They want you to calculate what is the final value of inventory after you return all the inventory that is spoiled or whatever. Alright? So the first method is to prepare the trade payables control account. Alright, prepare the trade payables control account. So what you need to do, same as the sales revenue, you look at the information in the question and you just fill in whatever you know first. And then you need to leave a line for inventory because this is an unknown item. Alright, so let's jump into it right now. So what do you know? Firstly, you know that there was a beginning balance. Alright, you know that there's a beginning balance of 9,600 at the beginning of the financial period. So, beginning balance will be recorded as a balance brought down. Right, be recorded as a balance brought down inside your trade payables control account. So that's where you get your balance brought down. Okay, pause if you need more time to write. Next piece of information that you know is that you saw here that there was a purchase return of inventory to credit suppliers and it amounts to about $1,700. What do I mean by purchase return of inventory? Means that after I took the inventory, maybe I discovered some inventory is spoiled, so I returned it to my credit suppliers. Now, if I return spoiled inventory to my credit suppliers, first thing I need to know is that inventory actually reduces, right? There is lesser inventory. I don't have the inventory now because I returned it to my supplier. What is the other account affected? The other account affected is trade payable, and trade payable also reduces. Why does the trade payable reduce? Because when I return my inventory to my supplier, I don't need to pay him for that inventory anymore. So that's why trade payable will reduce. And how? And so what do I need to do in order to record my trade payable control account? I need to record this trade payable minus, right? Trade payable minus how much? Trade payable minus 1,007. I'm going to record this in my trade payable control accounts. Now, it happened on the last day of the year for control accounts. So June 30th, trade payables control account reduced by 1,007. The other account affected is inventory. Since the other account is inventory, I shall write inventory in the account column. And at the side of it, I can just write purchase returns. Now, if you don't write this purchase returns, right, it's perfectly fine. It's perfectly fine if you don't write purchase return. Just that for me, I like to write purchase return so that when I look at inventory 1007, I know what is happening. All right. And then in the info column, I'm just going to write here, this came from additional information part I in the question. So I know where, this part I here. So I know where it came from. All right. So please feel free to pause if you need to write things down. All right, next piece of information, it tells you that there is a check payment to credit suppliers. And again, there is a cash discount. So let's treat them separately. When there is a check payment to credit suppliers, what is the double entry that will be recorded? When you pay to your credit suppliers, right, you actually record a bank minus because you have lesser money in your bank. The other account affected is trade payable, also minus because now you don't need to, you have paid your credit suppliers, your trade payables will go down. So which one am I recording? Actually, I want to record my trade payables minus $12,375. So under the trade payables control account, I will record trade payables minus 12,375 dollars. And then what is the other account that is going to be affected? The other account going to be affected is cash at bank. And after I do this, remember to continue to calculate your balance. So in this case, right, what is my balance? $7,900 credit, which is a positive number in this case, minus away 12,375. Oh, so now what happened is that my initially credit balance or my positive balance has now become negative, or it has become a debit balance. Alright, let's take a look at the next piece of information. Aha, there is a cash discount. So when there is a cash discount, what is the double entry that will be recorded? So because this is a discount that your supplier has given to you, right? This is going to be recorded as a discount received. And you have recorded an increase in discount received. Since you got a discount from your supplier, do you need to pay your supplier? Don't need to pay your supplier. Or at least don't need to pay him that amount lah. So that's why we will record trade payable minus. Now what's going to happen is that we will need to record trade payable minus into the trade payable control account. So I'm going to record trade payable minus minus how much? Minus $125 because of discount received. So that's how we are going to record it. Trade payables minus $125. Why? Because the other account factor is discount received. What date did it happen on? Typically, you will record the accounting control account at the end of the year. Alright, how are we going to calculate our balance? So now your debit, right, is a negative balance. So what this means is negative 4475, and you are going to minus again as well. So minus 125 from 4475. And that will give us negative 4006. Alright, let's take a look at the last information. Cash purchases amount to 3,500. So when there is a cash purchase, what are the two accounts that's going to be recorded? Firstly, you bought inventory, so you record inventory plus. Does it affect trade payables? No, because it's cash purchase. On the spot, you pay. So very likely, it's going to be cash in hand. And cash in hand also increase, but doesn't affect trade payables at all. So these cash purchases do not need to be recorded inside the trade payables account. Oh, let me type it down at the back. Okay, so no need for trade payables. Okay, so cash purchases for inventory don't need to record in trade payables account. Right, so let's take a look at our trade payables account and see, okay, so now we have recorded up to here, but how do I proceed? So I just want to remind you, take a look here. After you recorded everything that you have, right, what you need to do is to just leave a line, because this is an unknown item, you don't know what is it, and you do the last part. All right, and the last part will be to record the ending balance. So now you have an ending balance of 11,800, right? So we are going to record this ending balance. How do I record this ending balance? Firstly, I record the final balance column. Alright, so I will record, oh, where did this number come from? It actually came from my question, 11,800. So there you go, 11,800. So if this is the ending balance, how would I record under the account column? You'll be recording this as a balance brought down, and this is basically your ending balance. And your balance brought down is always on the first day of the month. That's why I have July 1st. So the next question is this. How did the trade payables go from a negative number to a positive 11,000? Right? So usually when this happens is because you have purchased some inventory. And when you purchase inventory, right, usually you will record it at the credit column. After you purchase this inventory, originally your balance is $46,000 debit. After you purchase this inventory, your inventory value went up to a credit amount. Alright, it went up to credit amount. What is the credit amount that it went up to? It went up to 11,800. So how do I find, of course, I'm going to fill in all the blanks first. So how do I find my credit purchase of inventory? Okay, firstly, I need to know that, hang on. Okay, so firstly, I need to know that from 4,006 to 11,008, this is the number sentence, negative 4,006 plus the number of your credit purchase of inventory will give you 11,800. Right? Again, I'm going to shift around some numbers so that I can find out what is the unknown easily. And I found out that my credit purchase of inventory is going to be equals to 16,400. All right. But then again, let's not forget, this is only credit purchase of inventory. Actually, the correct question, or rather the correct answer that the question one is net inventory purchase. Net inventory purchase means that after you have returned whatever damaged inventory. So net inventory purchase, the formula is cash purchase plus credit purchase minus purchase returns. So how do I calculate this? Actually, everything can be found already. Let's see, is cash purchase available? Yes, it is available because it stated here that the cash purchase of inventory is $3,500. All right, and so our cash purchase of inventory is going to be recorded as such. Cash purchase 3,500 plus credit purchase, which is 6,400 plus $1,700, which is purchase returns. And of course, that will give me your net inventory purchase of $18,200. So this is the first method where I prepared my trade payable control accounts. What if, like the previous sales revenue, I don't want to prepare a trade payable control accounts? Well, same thing, you can just calculate the credit purchases without preparing the control accounts. But remember, if you write something wrongly, then the repercussions are quite severe. So if you want to do the calculation part, you don't want to prepare the control accounts, you still need to recall, you still need to remember your trade payable control accounts because it will help you. So again, your trade payable control accounts, your objective, right, is to prepare to calculate what is the ending balance, right? So in order to calculate the ending balance, you took your beginning balance minus away your inventory minus your new purchase returns. So minus away new purchase returns, minus away cash at bank because you paid the traders, minus away discount received. And then, of course, you have to add your inventory, whatever this amount is here. And in this case, this amount here is 16,400. Right? So that's what we are going to do. We're going to start with ending balance first, right? And then after that, your beginning balance. For your beginning balance, right? So you start with your beginning balance. After your beginning balance, you must remember, oh, I'm going to record my credit purchases of inventory, right? And then after that, you follow the rest of your trade payables account, minus inventory, minus purchase returns, minus payment, minus discount received. All right, so the rest of it, minus purchase returns, minus payment to your credit supplier, minus away the discount received. So if I were to substitute all the numbers in, all right, my credit purchase is still unknown. I just put in all the number first, and then I manipulate the number statement, the working, so that the credit purchases, so that I have fewer numbers to deal with. And from here, I will be able to find out what is my credit purchases. And it should be exactly the same as the question above. My credit purchases is exactly the same. If it's not the same, means that you did some calculation error. So therefore, in order to find my net purchase, net inventory purchase, I will need to take my cash purchases of inventory plus my credit purchases of inventory and deduct away my purchase returns. If when I substitute in the number, my answer will be exactly the same. 18,200, let's do a check. Yes, 18,200. So it will be exactly the same. So to repeat myself, method 2 is a good method if you don't want to do too much working. But method 2 is a very risky method because if you forget one of the items here, right, then that's it. Your answer is wrong, right? So you have to learn both methods. Alright, usually you can choose the methods unless they specifically ask you to prepare a control account. Okay, so what you should do is you should do practice 3 and 4 on page 12 to 14. You can do it later after you finish this whole set of notes, then you do it, or you can take a pause now and try to do question 3 and 4. Actually, my suggestion is take a pause now and do question 3 and 4 first. Alright, later you can submit all your work into Google Classroom together. Alright, and this is the end of the second portion. Alright, this is the end of the second portion where you learned how to derive inventory from control accounts and how to calculate what is the inventory that you purchase. All the best.